Been a tough year being a property investor? Rising interest rates got you second guessing? Not sure who to turn to for help? You need to reach out to Australian Property Scout, one of Smart Property Investment's most trusted buyers agency. Director Sam Gordon has personally helped many SPI show listeners invest to reach their financial goals using his purpose-built strategies. So what are you waiting for? Head to www.australianpropertyscout.com.au and book in a call with us today.
This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Hello everyone, Grace Ormsby here. Welcome back to a brand new episode of the Smart Property Investment Show. We take a look at the news going on all day, every day here at Momentum Media. Behind the scenes, Smart Property Investment, our team of journalists are always looking for the latest news and updates to make sure that you can stay informed on your investing journey. And something that recently came across our desks was Domain's rental vacancy report for October 2022. And that showed that nationwide, the vacancy rate is sitting at 0.8%. Pretty crazy stat right there. To unpack exactly what that means, it is an absolute pleasure to be welcoming Dr. Nicola Powell, Domain's Chief of Research and Economics, to today's show. Nicola, thank you so much for taking the time.
It's so great to be back. Thank you again for having me on.
So 0.8% is a pretty crazy headline figure on this report and obviously means that we're in a landlord's market. Let's talk through, before we get into some of that stuff, what this report actually is and what it actually can tell investors and tenants as well across Australia about the state of the Australian property market.
So the vacancy rate is a really good indication for landlords, investors out there to see that balance between tenants and landlords and whether we're in a landlord's market or a renter's market. So it really does give us that kind of benchmark to where the market is swaying. And it is firmly in a landlord's market, Australia wide. So this isn't just isolated to one particular area. This is a rental crisis that is happening across many regions across Australia. When you've got a vacancy rate nationally of 0.8%, that is a tight rental market. And just for context, for somebody that perhaps doesn't know what the benchmark of a vacancy rate is, we tend to say 3% vacancy rate indicates that it's a balanced market. It's a balanced market between tenants and landlords, investors. When it goes below 3%, and particularly when it gets below 2%, that's really when you're getting it swinging towards and more favourable for landlords. And, we've got a sub 1% vacancy rate. So that is squarely, firmly in a landlord's market. And as I said, this is regional, this is capital cities. It impacts every single capital city to a varied degree.
We do have a very strong investor base of listeners here, Nicola, so they're probably cheering hearing you say that we're squarely in a landlord's market. But what is it about this current marketplace that has driven this kind of conditions? Because it doesn't happen very often, does it? It's a record-breaking result, really, at this point.
So this is a record low vacancy rate. So it really means for tenants out there, it is presenting challenging conditions. They do vary slightly depending upon location. Some of those vacancy rates in some of those capital city areas are slightly higher. But largely, it is challenging conditions across Australia. And, this isn't something that has been created overnight. It's not something that's even been created over the last 12 months. We've got to this point in terms of this rental crisis over a period of time. This has been building for a number of years. And, that is due to a variety of different reasons. The lack of supply of affordable housing, the acceleration in property prices, really locking tenants into the rental market for longer than they had hoped. We saw a boom during the pandemic that we've never seen before across Australia. And things like even Australia hasn't built enough social housing. And so what that means is we have some low-income households that are in the private rental market, which is what we're talking about here, and they're not in social housing. So there are a number of factors that have driven us to this case or this point of time, and I think, we've got increasing demand pressures. We have got that increasing migration from overseas. We're seeing that return of foreign students, and that is placing additional pressure on our rental market at a time when it's already strained.
We're going to take a quick break there, but there's so much more to unpack. See you on the other side of this break.
Whether you're a first-time investor or already have a healthy portfolio, we all know there's a lot of stress that comes with property buying. That's why best-selling author and regular guest on the Smart Property Investment podcast, Paul Glossop, has outlined all his battle-tested investment strategies that have helped him and others upsize their portfolios, avoid money-draining pitfalls, and build wealth through property investing. Get your free copy of the best-selling book, A Surfer's Guide to Property Investing. Head to purepropertyinvestments.com now.
Welcome back to this episode of the Smart Property Investment Show. I'm joined by Domain Chief of Research and Economics, Dr. Nicola Powell. Nicola, just before the break, you were talking about how it's been really a number of years and convergence of factors that have led to this record low vacancy rate and this rental crisis, which has put us squarely into a landlord's market. And I'm sure plenty of people listening along are probably wondering, if it took us this long to get into this situation, how long will we see this market actually continue for? How long will it be good for landlords to consider getting themselves into the market and maybe providing some support for those tenants that are struggling to find somewhere?
So I think, there's no real quick fix to alleviating these tight rental conditions. I think, there are a number of things that we could do to help to provide that boost in supply or even alleviate the demand. We do need to encourage investment activity. It's clear that we do need more rental properties across Australia, but it's also things like advancing the build-to-rent sector, providing additional rental assistance for those low-income households, more social housing, and really helping tenants transition to being homeowners to take away some of those demand pressures. It was really encouraging to see in the budget that they did focus on the supply side of housing. And I think, that's encouraging because affordability is really smack bang in the middle of this conversation, not only for rentals, but also for purchasing your own home. And I think, the supply side is an important part of the equation. It's really pleasing to see that the government are focusing on that and trying to address that.
You've sort of segued very well into my next question, which was going to be around that, 2030 target to have built 1 million houses by that the government has brought in as part of that budget, and how much of a fix will something like that actually provide, or is it just kind of one part of many things that need to be going on right now?
Look, it is a lofty goal to build that many houses, but I think, as I said, it's really pleasing that government are focusing on the supply side, because when you focus on the demand side and you boost demand for housing, it tends to just kind of elevate price, particularly at that lower, more affordable end. I think my question goes back to, what is the type of housing we are going to supply? How are we going to provide that supply in a timely manner to market? Because we've got delays in building completions due to supply chain issues. So, a supply side of the equation is definitely no quick fix, but I think it's good that it's on the table.
And one of those things that they did talk about at that point was making sure that the housing was going to be in suitable areas. And one thing that I have found really interesting as part of this report, Nicola, is that while 0.8% is so low to be nationwide, but I just can't believe that all the capital cities are also as low as they are. Have we ever seen it like this before, where we've sort of seen everyone grappling with rental vacancy rates sub 1%?
We haven't. And I think, when you've got some of our cities, so Adelaide is 0.2% vacancy rate, Perth is 0.3% vacancy rate, Hobart 0.3% vacancy rate as well. These are extremely tight conditions for people who are looking to secure a new lease in these areas. We've seen, overall across Australia, a record low level of rental listings. So over the past year, we've seen rental listings decline by almost 50%. So they've almost, it's a big drop over the last 12 months. So, we've never seen these conditions before. They are, as I said, they are slightly different depending upon your capital city. So I think from an investment perspective, I think what this showcases is kind of an education piece around what are those areas that are, a tight rental market, even in those sub-cities. We provide vacancy rates at a sub-geographic level within cities. So it really helps you on that research journey to help decide where is the best place for my investment property to be. And also looking at some of the yield potential, because at the moment, we've got gross rental yields improving because we've got a softening rental market and rental prices that are rising. So actually, from an investment perspective, gross rental yields improving at a time where we've got very tight vacancy rates can be very luring for an investor.
And I guess extrapolating on from that, and I don't want to be making too many assumptions, but based on the fact that prices are going up in the capital cities, and we are going to then be seeing people pushed outwards into the regions more so. Is that a fair assumption to be making?
So you mean rental prices?
Yes. As rental prices go up and vacancy rates contract, we're going to see people that are looking for housing elsewhere.
That is very true. And I think it plays out even more so in the rental market, because the rental market is more transient. And I think what we see is almost a rental price ceiling where budgets just cannot meet the increase in rents that have been seen. And what that means is people then make different decisions. That could be a location, and as you say, go to a cheaper area. Maybe it's regional, maybe it's on the outskirts of a city, or they decide to go into a house share. I mean, we've got escalating costs of living, and it's all about trying to reduce your expenditure. For some, that may mean that they're forced into deciding I need to go into a house share to be able to afford to meet this type of rental increase.
That brings up even more questions and answers. So we're going to take another break there. We'll be back on the other side with more from Dr. Nicola Powell.
Want to slash thousands off your home loan repayments? Whether you're an investor or homeowner, we know how important it is to find the lender that suits your unique situation and with the best rate. If you've not compared your home or investment loan in the last 12 months, you may be able to cut your repayments today with a different lender. That could mean more money in your bank account and less stress when it comes to paying your loan. Find out why more borrowers are turning to Finny to refinance their home loans. Call us now on 1300 002 023 and find out what you could save, or visit our website finny.com.au to book an appointment.
Welcome back to this episode of the Smart Property Investment Show. I'm joined by Dr. Nicola Powell, Domain Chief of Research and Economics. We are unpacking Domain's rental vacancy report from October 2022. And obviously, it's some really, really interesting insights in there, Nicola. Before the break, you mentioned that we're seeing people have to make very different decisions now from the tenancy side of things purely because not only is it harder to find a rental property, but it's also harder to find something in their budget. And I'm very curious what this means for the kinds of the profiles, I guess, of the properties that investors will be well versed to be kind of aware of and maybe considering parking their money within. Because by the sounds of it, houses are becoming more expensive. It's one of those things where, maybe if you are getting priced out of a big family home, you will have to then turn your attention maybe to an apartment. Is that what you're seeing on the ground?
It's been a really interesting dynamic watching this particular price cycle, because what we saw during the pandemic boom was house prices outperformed unit prices. And we saw this massive gain in house prices. And, affordability really comes into that equation, because it then kind of diverts demand towards units, demand towards kind of, more affordable areas. People have to adjust their budgets. But I think kind of from an investment perspective, it's really interesting watching the dynamics unravel during the downturn, because largely what we're seeing now is unit prices are holding firmer than house prices. So we're seeing bigger drops in house prices compared to units. And I think part of that is the affordability equation. We've all got lower borrowing capacity now due to higher interest rates and higher levels of inflation. So our expenditures increase, which has damaged that borrowing capacity. So I think, we're all going to market with less to spend, but also this perceived value that units offer, because units didn't grow as much as house prices during the boom. So I think people are seeing that perceived value, affordability of units. And, we are seeing house prices fall quicker than unit prices. And we're certainly seeing that more so in some of our bigger capital cities, such as Sydney and Melbourne.
So gross yields would come into that, where we're seeing the value, even from the investor's perspective of, well, maybe, my unit has not actually seen as much capital gains, but the rent that I'm able to get off the back of that makes it a really worthwhile investment at this point in time, which we haven't had that mindset for a couple of years, have we?
What we saw during the pandemic were, gross rental yields did fall because we saw purchasing prices rise, particularly for houses. And I think, from an investment perspective, it really depends upon, are you after that cash flow? So do you want a positively geared investment, or are you looking for that negatively geared property? Generally speaking, negatively geared properties are more common in our higher price markets such as Sydney and Melbourne. But I think what's interesting now is we're seeing gross rental yields improve. Generally speaking, units offer a better gross rental yield, so a better cash flow than house rentals. And we're largely seeing, particularly across our bigger capital cities, gross rental yields improve. Now this is a good thing for investors. And, they do vary as well, depending upon the city in which you want to purchase. For example, in Perth, gross rental yields for units are almost hitting 6%, whereas in Sydney, gross rental yields are just below, they're sub 4%. So there is a big difference depending upon the capital city. And let's bear in mind, we've got landlords market across all of these capital cities.
It will be an interesting situation that I guess is going to continue to play out. While this is obviously the October snapshot, it is something that we've already talked about you expect to last for a while longer yet, Nicola. What are you sort of anticipating even over the next 3, 6, 12 months with regard to this situation? Will they just stay down where they are? Is it just going to be quite dampened for that period?
So I think particularly over, say, the next 3 months, because we're moving into what we call the changeover period in the rental market. And so what you tend to see seasonally is a lift in available rentals, because this is when we see that shift within the rental market. But what you'll see is that new university year kicks in 2023. We'll see an increase in foreign students, international students coming back to Australia. So while we will probably see a seasonal lift, we will see that shrink back down as well. And I think, once we start to see that January period come to a close. So I do think that it's going to be interesting to see how tight the rental market is after we see that wave from, the new university year starting.
There is a little bit of irony in there, Nicola, that we're seeing such abnormal conditions, but normal life still does go on. All those normal factors that are at play at the market are just going to, keep happening. That yearly cycle we expect.
Yeah, totally. And I think the other thing here is, we've got a skills shortage in Australia, and there is a big drive to bring skilled workers back to Australia, bring backpackers even back to Australia as well. And I think, overseas migration, foreign students, we're seeing a massive tourism drive from Australia, international tourism drive. This all kind of feeds into the rental market conditions as well, because what you find, particularly in tourism, really ramps up. What we'll see is some investors will be lured to the short-term rental market, and that will have an impact on the longer-term rental market, which is what we're talking about here, where, you have leases for 12 months or more. So, I do think the outlook is going to be a tight one for tenants. But I think that as long as we continue this conversation around how we're going to address this affordable supply and how we're going to address the housing and particularly rental crisis that we're seeing, changes should come.
Nicola, as always, absolutely a pleasure to have you on the show. Thank you so much for sharing your insights with our listeners.
Thanks for having me again.
To everyone who is listening along, we hope you have enjoyed this episode. Like or review us on whatever platform that you listen to your podcast on. And if you have any questions, never hesitate to reach out, editor@smartpropertyinvestment.com.au. Stay up to date with us on our social media, Facebook, Twitter, and LinkedIn. Subscribe to our website for all the latest news as well, smartpropertyinvestment.com.au. Until next episode, stay safe and well wherever you're listening from. Bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Would you like the latest news and insights in HR, leadership and people management? HR Leader has you covered. Subscribe at hrleader.com.au.